On Thursday, the White House announced a flurry of new reciprocal tariffs just hours before its midnight deadline. The new rates go as high as 50%, targeting more than 90 countries and territories. This second round of tariffs is scheduled to take effect on August 7th. Meanwhile, the August 1st levies, including those imposed on America's top three trading partners, Mexico, Canada, and China, commenced on Friday. Global stock markets tanked, leaving U.S. trading partners scrambling to curb the ensuing economic volatility. We begin with this report from CGTN's Owen Fairclough.
From Afghanistan to Zimbabwe, a Black Friday for trading partners across the world as Donald Trump unleashed tariffs he threatened on his so-called Liberation Day in April. Switzerland, whose luxury watch sales have a growing U.S. market share, nominally the hardest hit with a 39% rate, leaving its president trying to keep negotiations for a lower tariff alive.
I spoke to the president last night. For him, there's only one aspect that matters, and that's the trade deficit. So for him, you see, in his interpretation, the United States is losing $40 billion, or almost $40 billion a year, which is caused by Switzerland. In my opinion, that's absurd, because if you also looked at the trade with services, it's almost balanced.
Even countries like the United Kingdom, who enjoy a trade surplus with the US, that's buying more from it than they sell, haven't escaped. But the 10% tariff it agreed before Friday's deadline looks better than most, especially compared to countries in the global south who supply Americans with everyday essentials, from clothes to electronics. Yet Cambodia's government thinks a 19% duty is a Pyrrhic victory.
This rate allows us to maintain the remaining factories in Cambodia, and we have the chance to expand more factories, attract more investors to come invest here for the interest of our nation, which is in the creation of jobs for our people.
Some industry leaders in South Africa, paying a 30% tariff, aren't confident they can absorb the extra cost to maintain jobs.
Very concerned for the citrus industry, as they do export a lot of products to America, and they do employ a lot of people, so that is a big concern. Obviously, they have plans to supply this year, so what's going to happen with all that product?
Analysts say Trump is now wielding tariffs as a political weapon, even against one of his closest neighbors and allies. Warning Canada, Washington's second most important trading partner after its other neighbor Mexico, that a bilateral trade deal is under threat for its intent to recognize a Palestinian state. If Trump is tuning out these concerns for now, he does pay attention to stock markets, many of them opening down on Friday as they factor in how much more expensive life will become in a dramatically altered global trading landscape. Owen Fairclough, CGTN, Washington.
To discuss this and more, let's bring in our guests. Joining us from Tokyo, Liang is a chair professor in economics at Willamette University. Otaviano Canuto, a senior fellow at the Policy Center for the New South and a former vice president of the World Bank. He joins us from our newsroom. Sourabh Gupta is a senior Asia-Pacific International Relations Policy Specialist at the Institute for China-America Studies. And in New York, Anthony Chan is a former chief economist at JP Morgan Chase & Company. Thank you, everyone, for joining us. Anthony Chan, let me start with you. As I said, these tariffs are largely in effect right now. We still have that second round of tariffs, which will go into effect on August 7th. The president and his supporters, they are claiming victory, but really this is sending tremors throughout the world. You know, the system that we've known for decades is now being changed. In fact, as one analyst put it, he said Trump has taken a hammer to the global trading system. So where do we stand right now? Is this a good thing for the United States?
It's not a good thing for any part of the world. Keep in mind that the major problem in the United States is that we consume more than we can produce. And that, of course, is exhibited by the budget deficit we have at the federal level. So there's more demand than production. And so it's kind of ironic that we want to consume more than we produce, but when we do it, we sort of get mad at the rest of the world for having trade deficits with them. So the impact of these tariffs, of course, are to slow global economic growth. The IMF, the World Bank, they've all conducted studies showing that. But we also know that in the United States, it also slows down economic growth and to some extent raises prices. And we saw that in the U.S. employment report, where wages were a little bit higher than expected. And of course, employment when you take into account the downward revisions, was weaker than expected.
Right, and Anthony, as we heard in our report there, the reason for Trump imposing these tariffs is somewhat distorted, isn't it? I mean, he talks about deficits, talking about goods, etc. But as we heard in the report, there's a services sector in which there is no deficit. It's almost balanced.
That's true, and that's true for many countries. Certainly in Europe, in the Eurozone, you have a huge trade surplus in services, and you have a trade deficit in goods. But he doesn't seem to take into account the services. And sometimes there are some countries where the United States has a trade surplus, and we have unilaterally talked about imposing a huge tariff, as in the case of Brazil, where we have a trade surplus with them, and still we are threatening them with a 50% tariff for other reasons. But again, seems illogical.
Liang, hello to you in Tokyo. China and the United States have been back and forth on these tariffs. At one stage, it got up to 145% for imports from China and 125% for Chinese imports from the United States. There were cooler minds after that. It landed at 30 and 10% respectively. What kind of impact are these current tariffs going to have on trade between the US and China?
Yeah, good to be with you, Anand. So first of all, I think, Donald Trump is using the tariff, as your reporter talked about, as a political weapon. So for China, for one, is China records, large trade surplus with the United States, and hence this sort of reciprocal tariff and also punitive tariff that trying to bring back the balance. But that really would hurt both economies. I think, as Anthony talked about, the United States is very much reliant on the global supply chain, and China really occupies a very important node in that global supply chain. So without China's intermediate goods and also consumer goods, the U.S. economy is going to suffer. You're going to see, higher inflation. You're going to see disruptions in the supply chain, and so on and so forth. And I think, even though the U.S. economy grew at 3% in the second quarter, but there are a lot of, factors that could derail that, recovery and growth. Inflation pressure is being one, and that also led the Fed to keep the interest rate steady. So I think it's not a good news for the United States. And for China, I think, trade is definitely important for China, especially when it's still readjusting domestic economy, from the real estate slump and so on and so forth. But that said, I think the Chinese economy is resilient. They're able to really quickly ramp up domestic demand through both investment stimulus, but also consumption stimulus. So I think even though this will be a negative impact on China's economy, China is able to hold up well with domestic demand and with policy support. But I think also for the rest of the world, this is definitely, a negative factor, not only because it disrupts the economic flows, the normal economic trading relationships, but it also undermines, the credibility of the post-war, global order. So I think all of these would just say that, this is going to be a backfiring policy, not only for the United States, but also for the rest of the world.
Right, Liang, very briefly, there are more talks that are taking place. There were more talks held in Stockholm earlier this week. What are expectations?
Well, I think the expectation is that there will be extension of the trade truce, probably by another 3 months, for both sides to iron out a lot more thorny issues. With the U.S.'s demand now, about China readjusting the overcapacity issue, quote unquote, and also not buying Russian sanctioned oil and so on and so forth.
Yeah.
So there are a lot of demands on the table by the United States. So it needs more time for both sides to sit down and negotiate more, because I think the current high tariff, again, it's not conducive for both economies' growth.
Otaviano, Brazil is facing 50% tariffs, although the vice president of Brazil did point out that 8 of the 10 products that Brazil exports to the United States will be exempt from these tariffs. But it seems that Trump has taken this beyond mere trade issues. He has threatened additional tariffs, and in fact he's even sanctioned a Brazilian prosecutor in the case against the former president Jair Bolsonaro. Bolsonaro and Trump are close allies. But for his part, President Lula da Silva said that Brazil will not allow its sovereignty to be compromised in any way. So how do you see Brazil respond to this?
See, Anna, a pleasure to be here again. The fact is that Brazil and Switzerland we're the only two cases of countries where the tariffs, as compared to the Liberation Day, April 2nd, went up, particularly in the case of Brazil, as you said, the 50%. One should take into account the fact that the exemptions, the long list of exemptions, reduce the effective rate to be applied to the Brazilian exports to something closer to 32%. Still, very much higher, not only than before, but as compared to other countries. We know of two major reasons, two major motivations for Mr. Trump in his tariff escalade. One of them is supposedly to push, make the movie back for a time when the U.S. manufacturing industry had the kind of jobs in Detroit, in the Midwest, and so on, that made up, let's say, what was the middle class in the 70s and 80s. But the point is that it's impossible to return to that old industry, among other things, because the technology evolved, and it's not possible to turn the film back now. But there is also, but in any case, and there are going to be the costs of this attempt to use tariffs, as Anthony highlighted quite well, an impact on prices. And by the way, we should pay attention to the fact that only 1 in each 10 middle-class workers in the U.S. Is employed in the sectors protected by tariffs. That's incredible. Yeah. For that, there's going to be an increase in the price of the consumption basket of the remainder of the population. Now, there is also, beyond the manufacturing objectives by Mr. Trump, as his Secretary of the Treasury once said, there is also a transactional side. Yeah. He wants to obtain other things that he wants that are not typically related to trade. And in the case of Brazil, I believe a movement has been exactly to attempt to use the tariffs to change the political. But this is bounded to fail, because the demands or the things put on as motivations for the extraordinary tariff are not bound to be abided with by Brazil. So it's really a unique. The hope is that instead of trying to trap Brazil into a political dispute, that at the end of the day, some negotiation happens on the trade side. And Brazil will ignore, of course, the demands about Bolsonaro and the Supreme Court.
Right. Sourabh, Gupta, India is facing tariffs of 25%, although in India's case as well, there are some key exemptions, especially in pharmaceuticals, electronics, energy, and critical minerals. They're all exempted. One looks at this, the relationship between the United States under Trump and India has been very good. I should say between Trump and the Indian leader, Narendra Modi, has been very good. They've been close allies. And because of that, the Indian political opposition is now making political hay out of this. Let's listen to the opposition leader, Jairam Ramesh. This is what he said.
It's a political setback for the Prime Minister. Howdy Modi, Namaste Trump, Ab ki baar Trump Sarkar. He campaigned actively for Donald Trump. He claimed to be one of the first heads of government to meet President Trump in the second term in February of 2025. It's a huge political setback for him.
So, Sourabh, besides the politics itself, how does India handle this?
I think the way India is going to move forward handling this is trying to keep convincing Mr. Trump that the offer that it's made on the table is a good one, and it will try to add to that offer a little bit here and there. But whether that will satisfy Mr. Trump is another question. The problem for India is that it is already was and is a high tariff country. So it's much harder for India to get down to zero tariffs, and particularly in the ag sector, which is very employment intensive. Many other emerging economies are promising, including in ASEAN, that we will come down to zero. And so Mr. Trump is saying, hey, other emerging economies can do it. Why can't India do it? And India is having difficulty in that regard, and I don't think they can get to zero. But they will keep trying to convince Mr. Trump that what they're offering is a good one. Besides, the Americans know that the Indian market is a big one. This is not, one just doesn't run roughshod over it. Yeah. And therefore the negotiation must continue, and the negotiations will continue. But Mr. Trump may be close to Mr. Modi and have good things to say about him. But at the end of the day, Trump has very particular ideas of what he wants out of these negotiations with all countries. Trade deficit reduction, industrially salient, industries reshoring, and he is not going to compromise on those fronts. So this is going to be a hard process for the Indians to manage and solve with Mr. Trump.
Right, Anthony, I just want to talk about what you mentioned earlier on the impact this is having in the United States. There was an op-ed in the New York Times earlier this week written by Jason Furman. He's the former chairman of the White House Council of Economic Advisors. He was there from 2013 to 2017. He points out in that op-ed piece that, despite all the positive talk and the backslapping that you see from Trump and his supporters, that the economy has slowed and that inflation has increased. And that this was caused partly by the tariffs as well as the Trump administration's immigration policies. What's your view on that?
Well, I think it's very clear that if you look at the statistics closely, you will find that a lot of the products that are imported have gone up in price and rather sharply. For example, the last consumer price index numbers, if you look at cookware and tableware, they went up 3.7%, not year over year, but month over month. You also saw many other components of products that are imported, again, going up by leaps and bounds above the monthly averages that you're seeing in those numbers. And with regard to these tariffs, remember the Yale Budget Lab, that is nonpartisan, they told us that at the beginning of the year, these tariffs were 2.4%. And now the effective tariff rate is about 18.3%. So when you see tariffs going up that much, you have to understand that it has to be absorbed somewhere. It could be absorbed by the country that is exporting them. Maybe they absorb some of it. It could be absorbed by the companies selling the product or the consumers. And already we're hearing from U.S. major companies, whether it be General Motors or Ford, that they're absorbing a big chunk of it. And we are seeing products that are imported, like shoes and apparel, going up by more than the average. So they are having an impact. And the Yale Budget Lab goes so far as to say that the average household will bear a cost of $2,400 in 2025. If that's not a negative impact, I don't know what is.
Yeah, there was an announcement by Ford that it would be losing something like $800 million because of the tariffs, because of the parts that they import to manufacture their vehicles.
That's right. And that means that shareholders and the equity market and profit margins will suffer. And I am sure that many other companies are having those challenges. Remember that at the beginning of the year when the tariffs were announced, some of the retailers were talking about passing some of those costs. They got huge negative backlash from the presidential administration. So you don't hear many of these retailers saying it, but the reality is a lot of it or some of it is going to be passed, and that means higher consumer prices. And by the way, if you look at the consumer price index in the last couple of months, it's been ratcheting higher, and that's even true of the personal consumption deflator, whether you look at the headline or the core number. So they are going up. Now, you can make the argument that maybe the statistics are not correct. I don't like that argument, but I'm sure we're going to be hearing more of that moving forward.
All right. Liang, let's look at the situation in Europe. The European Union was able to get a deal with Donald Trump, with the United States. Most analysts, though, say that it was a one-sided deal. It largely favors the United States. Here is what Cinzia Alcidi, he is a senior research fellow at the Center for European Policy Studies. This is what he had to say about that deal. Let's listen.
I think that the EU is somehow hostage of the United States and in this situation, mostly because it's not only about trade. I mean, of course, commercial relations are important, but we know that Trump is willing to use all the linkages and all the EU dependencies to get certain kind of outcomes.
My apologies, it's what she had to say. So, Liang, what do you make of the European deal?
Well, I think on paper, Europeans is definitely, getting a raw deal. I think the French president said this is European submission, and the Hungarian prime minister basically said that Trump ate von der Leyen for breakfast. But I think at the same time, we have to see the relative, from the relative perspective. Europeans getting 15%, but many ASEAN countries are getting 19, 20%. So in that sense, it is giving Europe some sort of advantage. And also when you look at the automobile sector, 15% towards European cars, but for North America, for Canada and Mexico, which we don't know exactly what that is going to be yet, but it's going to be more than 15%. Right now, it looks like 25% for cars from these two places. So I think in that sense, Europe is still getting some sort of relative advantage. Europe also promises very large energy purchases, $750 billion, as well as $600 billion of investments. But again, these are big numbers that Trump likes to hear. Yeah. Europe needs to import energies anyways, and also the investment pledges. Some of it would be loans, some of them would be investments, and some of them will happen anyway, depending on the U.S. market situations. So I think in that sense, Trump is not getting a complete sort of victory, but of course he would like to take it as a big victory on paper. Now, again, I think all of this would, again, harm the U.S. economy as well, as Anthony talked about. When you look at the CPI in June, it's 2.7%, up from 2.4% back in May. And let's not forget, in the past few months, tariff was mostly on pause. So the real impact of tariffs will really be filtered through in the next, few months if things stay at the way it is right now. So I think, all of this would hurt the U.S.'s economy, its, consumer, sort of welfare. And I think one of the reasons, again, Trump is seeing tariff as a way to raise revenues. And that's why even for countries that are running a trade deficit with the United States are also getting 10%. So when you look at the tariff revenues in the first, 6 months, it reached $87 billion. And only, in June is $26.6 billion. And that's 4 times than the euro amount. So I think Trump is really using this very regressive consumption tax to pay for the big, wonderful, the so-called one big, beautiful bill to provide most tax cuts to the rich.
Otaviano, do you think there's a big collective rethink around the world right now with many countries considering their priorities, perhaps reordering their priorities, looking for other markets, because many now see the United States as an unreliable trade partner?
Yes. Well, we've seen this, for instance, in the case of China. China has clearly increased its exports to other clients as the perspectives in the U.S. market have dimmed. Other countries have spoken about enacting new trade agreements. The evaluation, for instance, is that the likelihood of the approval by the European Congress of the Mercosur Eurozone trade agreement is more likely now. Yes, there is a search for reinforcing collaboration by other countries. The side effect of Mr. Trump's policies is a tendential isolation of the U.S. economy vis-a-vis the others. One important detail, Anthony aptly referred to the Yale Budget Lab, and they show clearly the long-term effect, negative effect on the U.S. GDP. Of course, this negative effect coming from tariffs may be compensated by other dynamic aspects of the U.S. economy, but the tariffs by themselves, they are bad for the U.S. GDP. And also, particularly having impacts on the lower strata of the income pyramid. Those will be the ones, let's say, more negatively affected by the tariffs. So it's bad as well for income distribution.
Yeah. Sourabh, Gupta, I've got a bit of time left. I want to ask you about these threats of secondary sanctions on India. In this case, these sanctions will be higher tariffs because it continues to trade with Russia, particularly buying Russian oil. How are the Indians going to respond to that?
How the Indians will respond? I think they're going to find ways to stay within the good graces of the U.S. side, and they will do what they need to do in that case. They will maintain, of course, the Russia relationship is a valued relationship for India, so they will find other means and avenues to keep that relationship in good health and in good spirit. But if there are secondary sanctions coming on oil or oil products vis-a-vis related to Russia's actions in Ukraine by the West, India will adapt to what the Western policy is, and in relative terms will disengage from that trade.
Anthony, very quickly, I've got less than a minute, but let's talk quickly about Mexico. Mexico has been able to evade some of these tariffs. It has been given, the deadline's been extended rather, for another 90 days. Given the level of trade between Mexico and the US, will Mexico be able to avoid these tariffs?
I don't think Mexico will be able to avoid them, but for some reason, the president of Mexico, I have great respect for, has managed to be able to negotiate effectively with President Trump without getting him upset, and quite often has been continued to get these extensions. And these extensions usually will end up, in my judgment, in lower tariffs than they otherwise would have been, because the president of Mexico has negotiated with a firm hand.
Okay, and that is where we have to leave it. Thank you to all of you for being with us. That's it for this edition of The Heat. I'm Anand Naidu in Washington.